Alrighty, Doc here from North America. Happy Turkey Day for those in the States and for those outside the States. So this is like the big American holiday. This is like encompasses everybody. I know that the woke people do some crazy thing, but in the end result is that pretty much the whole country travels. This is the biggest of the holidays. And then after that, Christmas is next. But this is the big one. This is the big shoe. And we look at William Bradford who brought socialism, I guess what it is, he came to America, and they were running from King James because of religious freedom and so forth, and they went over to the continent, and then from the continent they put enough money together and came to the Americas. And they opened up the third settlement. So Jamestown was one, Gloucester, where I live, is two, and that's Gloucester, New Jersey. And then there is Jamestown. I'm sorry, not Jamestown. Plymouth Rock, up in Massachusetts. And so they brought socialism, some type of out of the Bible type stuff, where they're trying to, try to make some type of heaven on earth type of thing, where no one has to work or has to want or need, and they find out that people die when that happens. So, in other words, they end up perishing, not succeeding. And so then William Bradford decides, again, I mentioned this earlier in the week, decides that they're going to give all the property to everybody, and now they're going to be allowed to sell it. Before, everybody owned everything. Everybody was allowed to farm, and if they didn't want to farm, they didn't have to farm. If they didn't want to work, they didn't have to work. If you wanted to work, you could work. And so that is what we're celebrating today, is that they first start off as some type of commune / nobody has to work if they don't want to work, and they don't have to do this, they don't have to do that. It's heaven on earth. Then they realize that, oops, it doesn't work that way, and people start dying, and they start realizing, well, maybe everybody have a slice of land, and you decide what you want to do. And that's what this holiday is all about. And all of a sudden, we leap across the planet, and we dominate the planet, because now people are allowed to be, what's that magic word? Free. Free to do what they want to do. And so if you want to lay around doing nothing, you're not hurting anybody else. You're just hurting yourself. And if you want to work really, really, really hard, then you can work really, really hard. And who benefits from it? You do. And that's what this whole holiday is about. So, let's get rolling along. Let's make sure we have sound. I got so many buttons opened up today because I'm going in so many different directions. Because it's a holiday, and I'm not really looking to do much work from there. So, let's see, where's it at? There we go. There's the Dukascopy. Let's crank that puppy up. And let's see if there is me. And 3, 2, 1. Looks like it. I see middle age up there. Happy Thanksgiving to you, as we like to say around here. Happy Turkey Day. Yeah, it's an interesting thing. They say Jamestown was the same way, the first settlement too, and then I guess the second settlement, where I live, they started off more capitalistic, and because the first group that died because the weather was tough, and then that was the Dutch, and then the English came in. And the Swedes came in and were able to handle it, and very capitalistic, and for many, I guess, century and a half, 2 centuries, very successful industrially and so forth. And then as the country grew, going into the 1750s, 1800, that type of thing, 1830. Remember, the cradle of America is basically right here. Philadelphia. There was a organization which still exists to this day. It's called the Philadelphia. It's called the Gloucester Philadelphia Hunt Club, and now is considered the troop, or the troop of Philadelphia. And Tom Clancy used to write about it. He would always put it in his books. How the troop from Philadelphia, and they were with George Washington. When they succeeded crossing the Delaware and taking on the Haitians on Christmas Eve, right around this time of the year again. and they were the militia that still exists. It's the only legal militia in America. I was invited to join it when I was 26 years old. And I guess the Gloucester settlement never started off in socialism. But the Pilgrims, Jamestown disappeared, so there was no real holiday developed through that. But the Pilgrims, the third settlement, started the Thanksgiving holiday, and to me it's a birthday of capitalism and religious freedom. That's how I look at it. So. Let's see. Oh, mink. I like that. Thanks with the little hands. I like that. That's so nice. Very nice. And so yeah, we're here, and you can see the world is trading still. We didn't put out charts today because it's sloppy. It's the only thing that's really trading functionally is the stock indices and the currencies. So let's take a look at the Swiss against the dollar this morning and see what they're up to. Everything seemed to be, the dollar seemed to be being bought again. As I guess you have to say is as usual. You can see there the hinky-ashy moving up, lots of green. You can see the white line above. It is curved, and we're going to take a look at it. Let's switch this one over right there. We're going to look at it too on the Chicago Quant right there. You can see that it's pretty much unchanged. Just a little yellow, but a little plus for. Is that plus today? Is it minus? Can't tell what that is. I think it's minus a little bit for the day. You can see this is trying to curve right there. So, I'm a walking encyclopedia. I might be a walking goofball. I just look at things differently, I guess. I'm on some physics websites, and they're all. I just told them, got done talking with them. Like they look at negative numbers, and they're looking at Lenny's 11 dimensions out of string theory, and it's like, no, it's all screwed up. Oh, everybody here who watches Doc is seeing what the real math looks like for string theory, not what what Witten is doing and Ahmad and all like that. This is the real stuff right here, because all my math was designed for string theory, and I just use it on the markets. So it's the Jimmy Simon approach of it all, I guess you could say, in many ways. And so I have a whole story in that direction that would be fascinating, but I don't want to torture anybody, and I'm sure you'd all be bored of it. But in the end result is, thank you for calling me the encyclopedia, walking encyclopedia. I think that's a great compliment as far as I'm concerned. So, let me think, what else is it? What else we got going on here? Let me think now. There we go. We got a physicist from South Africa kicking in. I like that. That's good. Gives me a like on my explanation of why 11 dimensions are all wrong. Why I pick on Lenny. I'll tell you, Johan from South Africa is a tough physicist. He is doing the battle every day like I do, only he does it with the physics world. He tortures them all day long and fights with them all day long. And he's a physicist out of Virginia, but he lives down in South Africa, and he's from South Africa. Got his PhD there. But anyway, I'm digressing into physics here. Sorry about that. But anyway, there we are. Let's take a look at the dollar against the Swiss franc. You can see it right there, trying to move up or down or sideways, going nowhere because it's the holiday. All the trading desks are closed here in the States, and I'm sure London is kind of quiet. What else can we say about any of that? I guess that's about it. Let's jump over to the euro and see what they're doing with the euro this morning. And again, I don't expect the world to be that active today. It is docile. It's like I said, something like 2/3 of the world is not trading. And why would you want to trade in any pit that lost 70% of its traders? So that's like, whoa, you know that you're going to see, what do they call it, like illiquid action. So in other words, someone goes to buy something and it goes up much faster because there's nobody there to sell it to them, or vice versa. Someone goes to sell something and there's nobody there to buy it, so it falls further. And then what happens is that it's a kind of like a false value, because the participants who utilize this stuff, you know, what we used to do when I was young, we'd have stops put on a trading desk, electronic trading desk, even back in the 80s and 70s. You know, we'd still had, like, you know, some type of desk watching it out of London or Frankfurt or something like that, and we gave them the orders. And they would execute if it got too extreme on our deltas, you know. In other words, that's that gamma thing with the options and all like that. So, I mean, institutions do that now, but the thing is that, and they probably try to tip the stops, you know, just so they can abuse them. But in these times, with the central banks and quantitative easing, I don't know how fast anybody really is, and that's why they've closed down so many trading desks, because they get in trouble when they trade like that. You know, the Federal Reserve and the central banks really are, you know, fighting that freedom of you know, free markets and individuality and all that stuff. They really fight that a lot. So, all right. Let's see what else we got going on there. And then I'm trying to think what else. I guess that's about it. You can see the euro. Do I have the euro? Yeah, the euro is just slowly gliding down. And again, it's a very illiquid day, so we can't take it too serious. Matter of fact, you can see that it's popped up. I guess if we widen this out on the Chicago Quant, you can see that. We still are a red dot, just like the J4X is. You see that right there with the red bars on the hinkies. So, but you can see it's trying to turn up a little bit here today by not going down. And we talked about that yesterday. Chances are it's probably going to try to keep this 0.23 or the 23. You know, the 111.46 area is probably going to be some type of support for a little while. Because when it breaks it, there's a good chance, and I mean really break it, not just like for 20 minutes. I'm talking about when it starts to trade underneath it and becomes the resistance on the upside, chances are it's going to go find its way down to the 108s. So it's not just going to happen like, it's not just going to happen like instamatically, like a camera that gives you a picture instantly. I don't really see that happening. And at the same time, then we have to put in consideration the quantitative easing side of it. You know, all the central banks and the Federal Reserve want these products to trade relatively stable. That's the whole idea. Quantitative easing, the PhD thesis of that from Bernanke was the stability. That was the answer to it all. That's why he wrote this whole concept up when he was in graduate school. He wanted to try to find the stability of what went wrong during the Great Depression from 1929 to 1941. They wanted to, that was 12 years of the Great Depression. The worst part of everybody knows of the 1929 crash, and the collapse of the banking system, and the collapse of the economy, and the collapse of partial of the political system. And so, he wrote this paper about quantitative easing for his graduate degree, and that was a pretty prophetic. I think he's only 2 years older than me, so that was a very dominant or prophetic event to him. My parents grew up in the Depression and so forth, and the Depression was a very dramatic event, because one moment you had money in a bank or a brokerage house, and the next moment it was gone, and you might have not even been invested in anything. The banks and the brokerage houses went bankrupt themselves, and so there was no protection of it. So you lost assets for being a smart and frugal and conscious person in finance. You were punished because of the whole system itself was not designed to deal with that. It just wasn't designed for it. And so you had a Federal Reserve, and it did not step up. In other words, they invented the Federal Reserve. In other words, if they hadn't invented the Federal Reserve, chances are the Great Depression would not have happened. And because they created the Federal Reserve and removed the structure of capitalism, you had a destruction of the finance and political system from it. So, 1913, Wilson gets puts together the Federal Reserve because Congress and him are upset that J.P. Morgan, who was alive back then, and Cornelius Vanderbilt, and a lot of the billionaires of the day, and J.D. Rockefeller, they thought they had too much financial power in the marketplace. And so they thought, as politicians, they could do it better. 1913 to 1929. 16 years later, the whole financial system collapsed. These are things that they won't talk about. They just refuse to talk about. In other words, because they want to hide that, because they want to push the dream. They want to push that idea that the politicians are smarter than the people who elected them. And so that is, that's what the currencies now, the Forex, is trading in trading ranges, because they're following the quantitative easing theory of Bernanke, his PhD thesis, and he's the one that created QE. Basically, here, Obama's being, voted on, elected, and the financial system, which is in distraught because the Democrats have gone totally crazy, and what's his name, Barney Frank, who's head of the banking committee, or is at that point, I'm trying to think if he was head of the banking committee. That he wasn't head of it. He was a senior Democrat on it, and he controlled it still, because they didn't have enough Republicans to influence it. There's videos out there of George Bush, in 2003 and 2004, begging them to fix the system. In 2005, begging them. He's out there, doing speeches about it, and no one's paying attention, because all they want to do is get rid of him. They don't like him because he's talking about real facts and information after he got elected. And so, the Federal Reserve was created in 1913, and 16 years later, it destroys the banking system and everything else to a great extent in the United States, when it comes to just like what happened in 2008 with Mr. Obama's and the end of Mr. Bush's presidency. He was retiring, and Obama had pretty much locked in the whole race, and things were falling apart, and President Bush was trying to convince the Democrats to stop blocking policies that would change it from 2005 on, and they just refused. I saw Barney Frank crying on TV on CNBC, on Maria Bartiromo's show. They've removed that YouTube. I can guarantee you that. I can't find it anymore. I used to post it. It's gone. And Barney Frank literally crying, saying, "I thought we were doing the right things." That's what he was saying. He said, "I just can't believe this is falling apart again, and I'm so sorry, and I thought I was doing the right thing, and we thought as Democrats we were doing the right thing. And, here we are, quantitative easing, So that's why we see these products trading in trading ranges, because the central banks across the planet, with the love and affection of the Federal Reserve, are trying to follow in Mr. Bernanke, the Fed chairman at the time, his PhD thesis of quantitative easing. And that's where we are. So, that's why, like Middle Age and I and a few others are very sad to watch the metals market act the way it does. Here we have 6.2. Oh, another thing, Middle Age, I saw where the tips are really now getting big on the trading. Tips are Treasury. Tips they're an Treasury inflation product. That's why they call them tips, or tip. And what it is that they sell bonds not with an interest rate. They sell bonds that are going to give you, say, 1% over inflation. So in other words, right now, if you own tips over the last 6 months or a year, let's say the last 2 years you were investing in tips versus investing in regular bonds. Regular bonds now, government bonds in the States, like the 10-year and the 30-year, they yield, 1.5% or 1 3/4%, depending on which year, which amount of years you buy, right? But if you buy a tip, which is a U.S. Treasury bond, also, it's priced 1% over inflation. So now you're getting 7.2% of a U.S. Treasury bond. Yeah. How many times do you hear about that in the news? Not much, I bet. So can you imagine in a world where there's 15 trillion, and not billion, not million, 15 trillion invested in zero interest rate products, right? In other words, you buy a bond from Germany. You put out, say you put out your $10,000 and you buy that bond. You buy that bond, or 10,000 euros, and buy that bond. Now you've bought the bond, and now you're going to pay interest to the German government. The German government is not going to pay interest to you. Okay? Whereas, why is the dollar firm and strong and holds things in ranges? Because you come and you buy a $10,000 treasury bond, and they will give you, in this case here, if it's a treasury note or a bond, it could be 1.5%. You don't pay the U.S. government 1.5%. They give you 1.5%. But if you buy the same bond, same time date, you pay the German government 3/8, 5/16, I don't know, something like that, a quarter percentage point. You pay them interest. Okay? Now we have tips that we invented back in, I guess it was the early 80s under Ronald Reagan, to adjust for inflation. So this way people would be willing to buy U.S. bonds and not be afraid of the inflation factor. So they're based off of 1% over inflation. Yeah. That's a lot of the funds are doing that. That's why the dollar is so firm, because they're buying tips. They're constantly buying tips. I mean, everybody's out there buying tips, and so there's a tips ETF even. Now I'm getting really hip because I tried to straighten out quantum physics, and in one of the threads I'm on, and now I'm getting hit by a lot. I mean, if Johan is giving me a thumbs up, and he is one of the greatest critics out there, then I must have really stricken a chord. Yeah, without a doubt. Anyway, all right, where are we at? Tips. All right, so I'm getting all kinds of things from my physics side. So that's where we are with the euro. Let's go over to the British pound. Let's see what's going on there. And I don't know how many governments out there actually float bonds with tips. I think the British government might have a tips also. They may. The Exchequer might offer them. I'm not sure. But I wouldn't be surprised because, whatever the United States does, Britain does, and a lot of times whatever Britain does, the United States does. Up until recently, Britain was the second largest investor in America. Always has been. So, because we were a colony, so there's a lot of money here and a lot of supporters. Even if it's if it's 3 centuries ago, there's still a lot of supporters. All right, there's the cable. Let's put it up on J4X too. And there it is right there, J4X. Par 33.13 bid. You can see here we are at the bottom end of the range. Where's that red line? We've been in the daily sell for 3 days. Where's my fact check spreadsheet too? I don't think I updated it. I didn't update it. That's right. I didn't update it because last night is a Friday to me. So in other words, we're already into the weeklies as far as I'm concerned. So in other words, this week, for decades, I've always treated as the Friday. So to me, let's see, where's that? So in this case here, why don't I fix this while I'm here? I can do that. So that's a 3. And I can put the euro as a 4. And we can change the date on this too. Let me do that while I'm here. I'm going to make this the 26th. Because I think I will throw one out there for tomorrow, maybe. Maybe I will. 26th. Okay, there we are. Let me save that too. Yeah, so the cable, I think they do have gilts. I think they have tip gilts. I don't think they call them tips, of course, but they have something like that. I think they do. Yeah, I think they do. That sounds familiar to me. I think they pulled that too back in the 80s. I don't know if they still exist today or if they retired them. They could have retired them. I mean, it's possible. Let me just take care of this. I just want to save this correctly. Let's put this in as the 26th. And I think I might send this out to everybody on the 26th. Just for the sake of it. 26th. There we go. And we can fix this as we go down it, since I'm going to be looking at a lot of this stuff. Let's shrink it back down again. Shrink it back down again. There it is. Okay. And so you can see here the cable's still drifting also. You can see the white line on the J4X moving down. You can see same thing over here on Chicago's Quant. You can see the same thing. We're moving down and having the pressure. A little curve here though. That's cool, but we'll see. It's red dots and all the red hinkies going on right there. I hate when it does that. Now I gotta exit it out. All right. Let's see. Where am I at here? Let's get back to ours. There we go. Oh yeah, I'm sure of that. Yeah, I'm sure that's in an uptrend. There's no doubt about that. Matter of fact, I don't even have a tip on there. Why don't we do that? Let's put a tip up there for the fun of it. It is a holiday to me, so. Open workspace. No, let's not put it there. Let's get rid of that. Let's try it down here. Open workspace. And let's go over to the stock combo. You know, where we have like the orange juice and, not the orange juice, the coffee and all like that. And you know we haven't looked at in a while? We haven't looked at that Brazilian real. Let's turn. What is AG? I guess we were looking at something called AG at one point. Let's do this. Let's do lift. Let's take the lift out of there and put tips in there. Yeah, the inflation bonds. I don't think about them too hard because I create my own bonds as far as I'm concerned. So I don't really have a symbol. You know, I'm more of, because of options. Let's see, tip, smart. No, not that one. Yeah, there it is. Smart, tip. Yeah, so to me, I don't trust bonds because bonds are just so illiquid. So as far as I'm concerned, it makes more sense to create a synthetic. But you can trade the tip. The tip is decent. I mean, it's and they got options too. But yeah, the tip is like a bond in many ways. If you don't have an option on, I mean, you could do like the collar on it. So in other words, remember when this is going down, I guess interest rates are rising. Is that right? I guess that's how that works. Yeah. So when it's like the TLT. The TLT is a combination of like 7-year, 10-year, and 15 and 20 or something like that. I don't think it has 30 in it. And that's what the TLT is. I think we have the TLT on here. Let's see if we can put the TLT on here too. Let's see. Let's put it in right there. TLT. Format. TLT. Yeah, see, that's a combination of dates, maturities. But to me, the best of all is just the option structure, creating a synthetic bond. This way you don't get trapped. Yeah, so it's been moving down too. Let's see. Oh, here, let's show it to you now. Let's move you over to that. So there is, that's the TLT, and here is the tips. And when we scrunch up the tips, you can see that, I guess when it rises, interest rates are going down. That's what it is. Now that it's falling, interest rates are rising. I think that's how this works. And that's how the TLT works. And it probably looks the same. Yeah. So in other words, let's see. So it came from 170 down. As it goes down, interest rates are rising. No, I'm sorry. But yes, no. As it goes down, interest rates are dropping. And when it goes up, interest rates are rising. Okay, right. And so then when we go and look at tips the same way, does it work that way? I guess not. It works the opposite to it. So interest rates are rising, and this rises with it. That's what that is. Okay, and that's how the tips works. But TLT works reverse because it's trying to capture the interest rate. I think that's how that works. Yeah, so the TLT's been in an upward trend since Bernanke started rambling. Well, Powell started talking about transitory. That's all the way back to, that's 2 years ago, right there. So, you know, whereas you'll see the TLT is going down when we go back to it from back then. See, it's going down. And then as interest rates started rising, it rises. Whereas with tips, it rises as interest rates rise. It's the reverse of a TLT. So let's go back to that again. There's the tip. So, you know, they started picking up on the idea that interest rates were rising a while ago with the tips. They started coming in and buying the tips. They've been buying tips all the way up because they knew that interest rates were going to rise and it was a safe place to go. And then as inflation, the inflation kicked out. I guess it was like, this is where Powell talks about transitory inflation. But notice they bottomed that sucker out and started anticipating the inflation already. Buyers of the tips started coming in a quarter earlier. You know, somewhere in March they started coming in. Here's where Bernanke, yeah, I want to say Bernanke all the time now. Powell does his speech, remember, in June. There's, you know, there's May, there's July. It's every 2 months on this thing. So April's missed. You don't see April written down, but so this is where Bernanke. This is where Powell starts talking about inflation in a transitory way. Right there. There's June 16th, and it just goes ripping up. You know, because they know. So they're buying tips, and so tips have gone from 120 up to 130, which is a pretty big move. What is that? That's like an 8% move. You know, and you got to imagine at the same time the Federal Reserve is probably out there beating them up, just like they beat up gold. I bet if you put gold and silver up against this, let's see, I have silver on here. Let's see what silver looks like. I bet it's analogous to it. Yeah, see, this is analogous to it. So you got to figure. I mean, what is it? How hard is it? That's what I'm trying to say. How hard is it really for the Federal Reserve to beat up SLV or TLT or, you know, tips? It's not that hard at all. I don't think they trade that much of it, you know. So I mean, you know, they have trillions to fool with, the Federal Reserve, and you know, I think the U.S. stock market on a given day trades on some, you know, I don't know, $10 billion, something like that. So I mean, they outgun the U.S. stock market incredibly. So I just pulled up the chart. Okay. Oh, here's Jordan. Hey Doc, went long the 1 million on cable. Still practicing on a demo account. Watching the daily for retracements. Cool. That's right. You started doing that. I think we talked about that a while ago, right, Jordan? Like weeks and months ago, right? So you followed the webinars and you're paper trading the webinar basically. Is that right, Jordan? Which is a very good move, very smart move. That's the best way of all, you know, using the demo. You know, you get comfortable, you build your tools. After a while, you know, like I always say, you know, you go out to, if you follow like English soccer or, you know, world soccer or football, whatever you want to call it, and you know, those guys just don't practice on Friday afternoon and then go play on Saturday. They practice all week long. You know, traders do the same thing. They practice all week long, and they trade all week long, and they practice all week long, and they trade all week long, and they practice all week long. You know, so you know it's the right way to go, Jordan. Right way to go for sure. Yeah. So there you go. Look at silver. I mean, in the same time period. I mean, look at silver. He does he goes. Would you believe? Let's say this. Can you imagine a year ago, if we had a conversation here on Doc's webinar, and I said, okay, we're going to go to 6.2 inflation, where do you think silver would be now? What would Doc would have said? I would have said, you know, $35, $39, right? I mean, I'd have to say that. I would, you know, where would gold be? I would probably said gold went to all-time highs and is probably backed off because the Federal Reserve tries to keep it calm. All right, so gold should have been at 2,100, and more than likely right now trading at say $2,000 an ounce or something like that. All right, so now let's go take a look at those just for the fun of it. All right, well, obviously we just saw silver, and silver is trading at 20. It's battling in the 23s. And for the last couple of days, it's trying to go after 23. And then, take a look at gold. Gold, you know, we're daily sell with that thing too. And gold has fallen from 1875 down to 1775. Right? And we have inflation. We have confirmed inflation. And what's it doing? It's going down. I'm so sad. That's why I said that yesterday. I'm so sad. And it's like, why are you sad? Robin said, why are you sad? I said, I'm sad because the products won't do what they're supposed to do. You know, inflation's supposed to explode. Gold is supposed to explode. Inflation falls apart. Gold's supposed to fall apart. And what do we see? We see gold. Gold falls apart no matter what. It's like driving on three wheels in a four-wheel vehicle, you know? It just refuses to participate. And why is that? Because the Federal Reserve keeps on sitting on it. The central banks sit on it. They knock it down. They make sure that everything. It's like what they used to say. Everything is Rome. All roads lead to Rome. Remember that? You know, that used to be an old expression thousands of years ago, and even now it's used as a metaphor. Okay, all roads lead to Rome. Well, all money leads to the Federal Reserve. Everything is the Federal Reserve. Whatever the Federal Reserve wants, that's what the Federal Reserve is going to get. I mean, that's what it really comes down to. It's the craziest thing. And we see it here on the webinar because we look at it. We look at numbers factually. We look at them in reality. Because that's what Doc does with physics, and he does it with all of it. It's a lot easier to look at it real instead of pretend. I mean, why would you want to tune in if we just pretend around here? So where are we at here? Let's take a look. I just went somewhere in my head. Oh yeah, oil. So you can see there. Let's finish off the two currency pairs. Let's go take a look at the Turkish Lira, and then we'll go look at Canadian, and then we'll look at a little bit deeper into energies and metals. All right, so there is, what is that? That is cable. From there we go to, what was that? Let's go to Turkish Lira. Right there. Seems like it's locked in some type of triangle now. They don't. It's like a Jimmy Durante song. Should I come or should I go? I mean, they don't know what's going on at this point. I don't know. I can't play Jimmy Durante anymore. I used to do that once in a while too. I played Jimmy Durante. Ah, cha cha cha. Jimmy Durante was a comedian from the 1920s, 30s, and 40s and 50s here in the United States. Jimmy Durante. Hello, Mr. McGillicuddy. Or Mrs. McGillicuddy. All right, and then let's take a look at the Turkish Lira through the Euro Turkish Lira pairs trade, which is really interesting watching. And we'll put it up on J4X too here at the same time. Should I come or should I go? Do 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 do. And there it is there. Same situation, building some type of triangle. They don't know what to do at this point. I guess what it'll be is it'll go sideways for a while, build a new base. I surely hope. Remember when we were at 12 and 12 and a half, I was saying I sure hope we don't see 24. I'm saying that now. I don't want to see 20. I mean, this thing is going the way of the ruble. I mean, the Turkish Lira is headed in the way of the ruble. It's really... Watch out, people in Turkey. Watch out. I bet bank accounts over there when they can. You know, they'll distribute it out. They'll have savings accounts and checking accounts where it's kept in dollars. So you're literally trading. You're saving money in a pairs trade. All right, so there it is. That. All right, now let's go over to the Canadian. And there's the Canadian. It's kind of flattish because, again, it's the holiday. You can see a little pressure right here. So let's do this. Let me go fix that on the fact check spreadsheet. Oh, I hate when it does that. All right, let's put Canadian. Where's that? CAD. I'm just going to make it 11. And then if it closes there today, let me just save that. There we are. And then let's put it up on the JForex too, the Canadian. Do. There it is. It's trying to move up, I guess. You get a volatility signal. You got a red dot there, and you got a green dot there. And we're in the weekly buy. And let's see, you can see the daily is just rolling over a little bit from it all. Might just do another one of these and take another leg up at the same time. Middle Age says, March corn. Thanks. It started to run yesterday until they sold it down. I know. At the end of the day, they sold it down. I thought that was kind of interesting. It was hot and heavy. All the grains were. Did you see like the feeders and the cattle? Let me open up that over there. Where's that at? That is right there. Yeah, like feeders are like ripping through the roof. It's like, whoa. I mean, matter of fact, I think Robin was telling me that a bunch of clients had sent messages to us over the last 2 weeks saying, we can't believe it. We've been following you for, subscribing to you for over a year now since you started. Because we're young. We didn't start this until like a year and a half ago. And some of these people have been subscribing, and some of these farmers have been subscribing, and they were like, this is incredible. You picked it. You spotted it. We thought, and one of them said, we had two different farmers on the same day contact us and say, we thought, okay, so the math will be off a little bit because of the holidays, but this stuff is not going up. And then I guess it went up. I mean, I'm watching it, but I'm not watching it that close. And let me show you what they were talking about. There's wheat, yeah, and I don't think they're trading wheat electronically today. See, that's yesterday's stuff. They won't trade that. And then let's see. Here's April cattle. Where's April cattle? Right there. There's April cattle. Look at that move. And we had farmers right around here contact us and go, "Wow, we thought your math being long and weekly buy. Can't believe it went into a weekly buy and you're in a daily buy. We thought for sure they would sell it down, and then look at it. It took off. I guess that's all-time highs or something like that. And they were like, incredible, bravo, and they were thanking us. And they were like, excited, so excited. One of them added even a bigger service to us. But, it's like, yeah, look at that action. Look at the strength in that. There's the feeders. That was live cattle, the other one. That was April live cattle. Look at feeders, the young ones. I mean, they're trading that at $1 on the hoof, $1.67. And then corn did the same thing too, really. There's December corn. No, that's not it. Maybe it's the back months. Some of the back months really took off. Where is it at? Was it something like spring corn? I think it took off. It's like almost up to $6 a bushel now. That's DEC. There's SEP. I think it's like May corn or something like that. There's March corn. There you go. Yeah. See, it almost pierced this. What's that? Is that 90? Yeah. That's almost hit $6. That's $6 right at that line right there. And it's still in a weekly buy. It refuses to give up. So yeah, it's a. Oh, I'm sorry. Sorry about that. There we go. There we go. So, yeah, and check this out. There's April cattle. Look at that move. Yeah, we had farmers contacting us and thanking us. They pay us. They're calling and thanking us. Thank you, so we can pay you. That's so nice. I feel it goes up there with the encyclopedia statement from Middle Age. I think that's so nice. Not only do they pay us, but they call and thank us at the same time. It's like, that's so cool. I mean, as a technician, that is really cool that people are so happy with the work that they call and thank us at the same time. Not only do they pay us, but they call and thank us. So it's like, wow. I mean, you know that you're doing good. Talk about doing good. And then red wheat's the same way too. Red wheat, it looks a lot better. That Kansas City, Minneapolis red wheat, that baby's taking off. I said to Robin, I think I said it here at the webinar, when I was saying that it's not going to sit in the sevens. When everybody said, okay, it's done now, it's down in the sevens. I said, no, the math is screaming. Look at this weekly buy in red wheat. There it is. It's been in a buy since September. I said it's been in a weekly buy since September. Let's squeeze that up a little bit, And it's like I keep on going. Oh no, okay, yeah. It's been in a weekly buy since September. And I said to Robin, I said, they're not going to stop at $8. They're going to take that thing, even beyond that. And here we are up at 8.5 now. So, and that's a real popular one for the Canadians and everybody up north. 6.16 on March corn, we get hit. It could. One of the things I keep on noticing, we were out in the. Yesterday we had to go pick up dinner, and so I went over to a friend's, and he's got I guess about 150 acres of corn, right? And so his warehouse is over that way. So we go over to his warehouse because he's manufacturing. He manufactures something, and so then instead of being out on the gator, or the tractor type of device. It was so beautiful. It was dark, and we could see the stars. So next thing you know, the corn has been harvested, and so we're out there. We cut through the back where everybody hunts, and he's got a Dodge Ram, so it can go through the fields. So we're out in the middle of the cornfield, before we go to the restaurant to pick up the food, and we're looking at the stars and all, and we're sitting out in the middle of the cornfield. Also, we're chasing deer for the fun of it, with the pickup truck out in the middle of the dark, And so, end result is that, the corn is harvested. And what is it doing? It's going up in value still. That's because everybody has sold the futures contracts against this stuff. So in other words, they've sold their red wheat, they've sold their winter corn. I'm sorry, winter wheat. Everybody's sold all this stuff. If there's anything, let's go over to Dukascopy and look at the soybeans. And soybeans haven't even been harvested yet. In other words, there's tons of soybeans out there. They're not even harvesting. There's so much out there. And that's the only thing that's acting weak, is the soybeans. Where's it at? Right here. There it is on Dukascopy. Soybeans trading in the 12s. But it holds the 12s well, and it's at the highs of the range, So you can see, it's come down. The only thing that is sold there's left that you can buy probably is soybeans. That's about it. I think everything else is gone. So in other words, I don't think there's any corn. There's no leeway in the corn market. I think it's been bought up. It's all gone. We were out there in the truck out in the middle of the cornfield, and it's all harvested. There's nothing there, so you can drive your truck, without wrecking, running through corn because it's all gone. And same thing with the wheat and so forth. And you can see Minneapolis, the red wheat, and the Kansas City red wheat, ripping, heading for $9 now. And I remember oats are that way. Let me see. Let me put oats up there. We had farmers calling us, telling us, "Oh, we're wrong," when it was at $4 a bushel. It can't go higher. Well, they're still paying money, and oats are trading at yesterday. The high yesterday was $7.69. They were telling us down at $4. They called us. We had farmers that farm oats. They were saying this, can't. Your system's saying to be long. Back here in September, when it's $5 a bushel, they're like, no, it's not going to get past $4. And it's like, and then it ran up to $5. It was in a buy. There's oats there, in a weekly buy down in the 4s, and they're calling us and telling us, you can't be in a weekly buy. This thing cannot go higher. Oats have never seen $5 a bushel. Well, guess what, party traders? Yesterday, oats trading at $7.69 a bushel, almost double. Okay, the math just does it. That's all it is. We just follow the math, traders. That's all we do. So 6.16. I think May corn. I think May corn last year on the expiration days traded to 750 or 725. So March corn, you have to figure where's it at now? It almost hit 6, right? Yeah. Let me go back to March corn. I think I have May corn. We have a farmer that's following May corn too. Let's see where May is. That seems to be the one. Yeah, there it is. This farmer seems to be ahead of the curve all the time. Yeah, see, it pierced May corn. Went to 601. So that's going to be that's the new crop. That's got to be the new crop. Really, I mean, September and May and July are going to be considered the new crop. March has to be considered still the old crop. So whatever's left around inventory-wise, you know, I mean, when you didn't sell deck corn, and deck corn is not that far off either. Where's deck corn? Right there. There's deck corn. See, it's sideways, trading at 581. So yeah, I mean, 616. You would think May corn is going to see. It's already broken the 6 once, just yesterday alone. So March corn, I guess it'll be interesting. You know when March corn will be interesting? A couple days before it expires, because we saw July corn. I think it was July corn, not May corn this year. July corn exploded to like 726 the last 2 days. It went from 575. All of a sudden it was trading at 7 and change in the last day or two for delivery. So more than likely that's where the pressure is going to be. Does that make sense to you, middle age? So I guess when's the March options expire? What? Do they expire the first week of March or something like that, or the last week of, right around there, right? When does March options expire? You try to do the binary on that thing, you know, because you got to sit with it. So you got to figure that it's going to decay. So you do it as a binary. February. That's what I was afraid of. So like the last 2 weeks of February, March options. So they make sure it doesn't infringe. And then I think March corn, what's that expire? The third week of March? Second week of March, something like that? It's going to be mechanics that you have to deal with. And you know what's going to happen? The May corn will probably, if anything, do the calls in May. Because you got to figure that the next month is going to be the one that gets squeezed. You know, it may not be. You know, the real delivery will be the March, right? It would make sense. See, it's going to be very hard because even if you try to buy March futures to try to catch the expiration, you can't really hedge it with anything because the options are gone. So then you're trapped, and you can't buy the May options. So you can't buy the May options because they're going to be on the May contract. What it will do is, if you're going to do anything, you do a binary on the May contract, because what will happen is people will panic when there's a desperation to own excuse me, the March delivery. They may panic and buy May because they're desperate, to try to hedge. And that's one of those type of things like I did with the gold, when we talked about the gold, where you have an offer out there, because I figured that they would pop it and then drop it. And so you wanted to have an option, you wanted to be offering out there. Remember, you were looking for the 9s, or the 1850s or 1875s. And I said, we might hit the 19 and change, and then they'll drop it. And so what you want to do is you want to be out there offering, because they may run it to like 1875 or something like that. We were what, 1790s or something, 1770s. We went into the weekly buy, and I said, they'll pop it and drop it, because the Federal Reserve will come in and sit on it. And so it'll do the same thing with the grains. They'll pop it and drop it. So what'll happen is they'll pop the May for an hour or two. You're out, and the next thing you know, they'll drop it on you. But you can't. The only other way to do it is you have to literally have it in the silo. You'd have to own it in the silo and own the future. No, you have to own it in the silo, but not sell the future. Just own it in the silo, and then let them pop it, because you can always, hedge it with May. If you got it in the silo, you can hold it. You can hedge it with May. And so if it explodes for delivery of the March, like they did in the July of last year, or this year, in July of last summer, then you'll be able to capture that crazy insanity. You know, that's the physical delivery game, you know. All right, anyway, we've really gone too far into that, I guess. But that's all right. No one's jumped in. I mean, we're always willing to change and talk about gold, silver, and so forth. We're getting ready to come to the end, so let's do this. Let's take a look at the metals complex. Right, there's crude oil. You know, it's they are trading that in the electronic market right now. It's still in a buy, but a little weak, you know. And that's January. Let's take a look at the June contract, see what they're doing with that. We got a client that's trading the June contract. So we always have that. Now notice that is higher, or you know, it's basically a parity. It closed yesterday electronic at 75.25, and right now it's trading basically there again. It's 75.22 with a high of 75. Where is that? 55. So that's been basically, the back months are not weakening, and you can see the weekly's already turning up on it. Right there. So. See, hey 47. Hey Doc, can you look at the Gbp Jpy? Yeah, let's take a look at that. Gbp Jpy. Now we have it here. There's Gbp AUD. There's JPY. Looks like that's the last time we looked at it with you. There was in that sell. We went into a buy here. That was a goodie. Right there. Is that it? Yeah, that's it right there. Went into the buy there. Still in the weekly sell though. That's interesting. Still down, and now you can see today. Well, it's done it twice now. Went into the sell there on the 19th. Jumped back in. Did it make it into the buy? I guess it did. Yesterday it got into the buy on the 24th. Oh no, wait a minute. Wait a minute. It went into the buy right there the next day. So it did this. There you go. It's really tight now. There. We got 4 lines in like 5 days. And that one goes right there. So we got that sell. Let's widen that out for you. So we got that sell. Goes back into the buy the next day. Goes sideways for 2 days. And then now it's flirting with a daily sell. And we're in a weekly sell. Still in a weekly sell for what, 3 weeks now? Right there. Went into the weekly sell here. Let's just double check it. So it's in a buy there on the 11th. And it's in a sell on the 12th. So let's put that weekly sell in there. Let's save that so the next time you ask, we'll have it. Save workspace. Save workspace as. There we go. So it's been in a week. It's been in a weekly sell since here, but hasn't really done anything. Went right into the buy 2 days later. Had that action there. Went into a sell there. You're a loser. I'm a loser. The math is a loser. That's for sure. Right there. Because it has you into the sell for just 1 day and you're back into a buy. You can't take the buy. Now this might be the winner. You know, this closes in a daily sell. It is the holiday now, so I wouldn't trust any of this. I would wait till Monday. See what's going on there. Unless you're long, try to neutral yourself until you're, you know, try not to be too at risk, you know what I mean? So, how's that? Oh shoot, you can't see it. Darn it. I gotta look over and check those things. There we go. Here it comes. You'll see it in a second. There you are. You can tell what I'm looking at when I'm talking about it. I'm actually looking at the chart. And so there it is. So it went into the weekly sell right here. It was in the daily sell. That's the last time you and I talked about it because we have a line there. So we went into the daily sell right there. And then it fell and was falling. We probably talked about how it was falling. And then it kept on falling, but we were in that weekly buy. And then we went into the weekly sell finally after, what was that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a week in a daily sell, and then it goes into the buy a day later. Pfft, how nice of it! How nice, a blender. And then it goes into daily buys, tries to lift up, but you can't get long because we're in a weekly sell. And then it does this thing again. It goes into a sell for a day, and you get beat up on that. And then and now it's doing it again right there. So if it closes there, especially on Monday or Sunday night, if that thing is closed there, it's down below it, below this 153 and change, 50 area, I imagine, you can be short it because it's probably going to roll over. Tune in on Monday. We'll take a look and see. All right, traders. This is Doc from North America. We will be here tomorrow to look at this stuff. A little bit more trading will be going on. We do open up a few more products on Friday, but then we close really early again. This is a 4-day weekend here in the United States, the Thanksgiving weekend. It really does. It's a long, it's a big holiday. It's a holiday of capitalism and freedom of religion. That's what and freedom and freedom of religion and capitalism. That's what this holiday is all about. The thankfulness of everybody getting along and working along with each other and so forth. And prosperity, freedom, live free or die, baby. All right, this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, see you Friday. That is TGIF tomorrow? Yeah, tomorrow. But to me, it's already Friday. It's Friday for 2 days. Today's Friday, tomorrow's Friday, and then Saturday. All right, ta-ta.